Good morning and welcome to the Killik Co market update. This week we've seen the imposition of tariffs on a further $200 billion worth of imports from China to the US. This has been widely anticipated, but it has come in a little bit later than expected. We did initially expect these tariffs to come in by the 7th of September. As yet, we haven't seen an overly negative market reaction, partly because these were anticipated, but also because they have come in at a slightly lower level than expected. We did expect the level of the tariffs to be 25%, but they have initially been set at 10%, so slightly better than expected, and perhaps that's why the market has not reacted overly negatively. Now, with the imposition of these tariffs on a further $200 billion worth of goods, that now means that approximately half of all the goods being imported from China to the US are being affected by some kind of tariff. China has tried to retaliate and it has imposed some tariffs of its own, but the level of goods being imported from the US to China is much lower than the amount being imported from China to the US, so the scope for retaliation is not particularly high. However, we have seen some negative impacts elsewhere in the market. For example, the Chinese e-commerce giant Alibaba had previously pledged to set up over 1 million US jobs in the US. However, they have since reneged on that promise, and they said it's not possible to do that because relations between the countries are currently so poor. There has been concern that these Chinese tariffs will be impacting overall global growth, and therefore it's important to keep an eye on indicators of global economic health. One of these is the copper price. So copper is a metal that's used in pretty much every stage of the industrialization process, from wiring and plumbing all the way to cars and airplanes. So demand for copper and the copper price is thought to give an idea of how the economy overall is performing. So let's have a look at the price over the last 3 years. As you can see, we did have quite an extended period of strength from 2016 onwards. That's following the election of Donald Trump and following the implementation of a number of his growth-boosting policies. However, this year to date, after the imposition of the Chinese tariffs, there has been a period of weakness in the copper price. But if you look closely at the end of this chart, it does appear that that trend is starting to reverse. And if it does do that, and if it does go up the other way, that could be a positive indicator for global economic health. And also it could be potentially good news for copper mining companies. And elsewhere, Shinzo Abe, the Prime Minister of Japan, has just been re-elected as the leader of the ruling Liberal Democratic Party. Good news for markets. Markets have performed very well since he was first elected in 2012, and I think investors are keen to see him continue to implement his so-called 3 arrows of economic policy. So the first of these arrows was monetary easing. So this was a fairly dramatic program of quantitative easing and low interest rates, and the aim of that was to make it very cheap for companies and businesses to borrow money, and therefore that has boosted economic growth in Japan. The second arrow was fiscal policy, i.e. government spending. That's mostly been done in the realm of infrastructure, particularly ahead of the Tokyo 2020 Olympics. Now the third arrow, structural reform, is very much a work in progress, very much still happening, and this involves changing the culture within Japan in order to promote growth. And this involves initiatives such as getting more women into work, lessening the amount of regulation and red tape, and also promoting Japanese culture outside of Japan in order to promote Japanese exports. So let's have a look at the Japanese stock market over the last 10 years. As you can see, it did very much flatline from 2008 all the way to 2011. But since Shinzo Abe was elected in 2012, there has been a very notable improvement in performance, and investors are very much hoping that will continue now that he will be staying on as Prime Minister. So looking ahead to next week, we do have a fairly full diary, and we will be looking ahead to results from Nike and Accenture. That's it from us. Have a great weekend, and we'll see you next Friday.